Hello and welcome. In this video, I want to talk about how I do my charting for Bitcoin. And the reason I do this is because if I'm going long or short on some altcoin, Bitcoin can affect that. If Bitcoin has a dump or a pump and I'm in a trade that contradicts the direction of Bitcoin, it could be very risky for me. So even though I don't currently trade Bitcoin because I don't feel like I have enough capital to do that, and typically people with a lot of capital trade Bitcoin because it's safer and there's a lot of liquidity, I do my TA on Bitcoin just to see, where it might be going before I enter a trade. Now I've been using this for a little while now, and I feel confident enough to share it with you so that it might be of use to you and show you why I do it this way and why I believe it's a pretty decent way. I don't have any fancy, subscriptions to like one of those things. There's charts that show you all the liquidity and stuff like that. I don't have exo charts or anything like that. But the supply and demand zones do get respected and the fair value gaps. So this is what I do. In general, you want high time frames, really the 4-hour and above, but I find that the supply and demand zones on the 1 hour, which is close to the 4-hour, they work pretty well. For my fair value gaps, I go with the 4-hour and above, and I'll show you how this goes. Now, before I was talking to one of my friends, and I basically perfectly predicted this, that Bitcoin was going to bounce at 74K. But then I was working a job back then, and I didn't take any trades, and I missed it. And it had such a pump, and I was just waiting for a pullback. Like I was waiting for a pullback to some fib level, and it never happened. And now I don't work that job, so I have more time to do this. And I want to share this because I think it can help people. And so every week you have the start of a weekly candle and the previous week ends. So you're going to get a new key level once that weekly candle closes. So for me, that's 10 a.m. when that happens. It's like 8:30. I'm getting started early. But I'll basically look at the weekly when that happens, and I'll just kind of look to see where the top of the candle body is. And it does kind of look like, there's potential. I don't want to say Bitcoin's going to reverse here because the money flow is still kind of high, even though it's in a bearish divergence. Bitcoin has a tendency to kind of ignore bearish divergences until the last minute and have a quick dip and then go back up again because of the supply shock. But it kind of almost looks like it had a sweep of the weekly level, and it may be going down to fill some of these fair value gaps. We may have a dip. Not saying that's going to happen. Not financial advice, but I am going to show you why. Because I see that these levels often get respected. I could show you how I draw my fair value gaps, but it's pretty simple. I think most of you traders and easy algo know how these work. So, you're basically looking, when you want to find a fair value gap, you're just looking for a big candle, and then you just want to draw a box where there's no other candle wicks touching it, and there's no other previous, like the candle before, the candle after, touching that gap. And so you have a gap, and price will more often revisit these gaps and fill these gaps eventually. So when you draw these, the price comes back there, you may have a reaction, and it may help you with some trades. Now what I'll do when you have a big pump is I'll go on the hourly, and I'll draw Gann boxes on the opposite colored candles during the pump, and they often get respected before the pump's over. Like even now, so if I drew this box on this red candle before this big candle, eventually price, it may put in a divergence. Put in a divergence on the money flow, and then it came back down, tapped that level right there, and then bounced again. And this one here, the very last opposite color candle, this one got tapped later, like way over here, I think. Yep. So, this could be that it's hitting these demand zones, but there's also liquidity at some of these lows. So in many cases, you know, you're going to have price coming down here. You see that green line right there at the bottom of this wick? Price was coming down here to take that liquidity, and then it bounced again. So this is how the markets move. I don't really take into consideration market structure on any time frame lower than the 15-minute, and the 15 minutes kind of low. The hourly seems like the lowest that really makes the most sense. But the 4-hour is the standard. But as you can see, this hourly TA works pretty well. And when you had this here, Bitcoin was putting in bearish money flow divergence, and then it started to come down. It couldn't put in a higher high here, and it tapped this zone, which was this was actually a 4-hour, I think, that I put it on. Yeah, so normally I put them on the 1-hour, but it barely tapped it, and then it rejected. You often see these rejections on the middle band of TDIX right here. Just can't get above and hold. Oftentimes, if the slow MA can't get above or below the middle band, then you know it's probably going to reject, because that slow MA gets dragged along as the fast MA goes. And the slow MA kind of smooths out the fast MA. And I bet you that if I would have looked on maybe the 1-hour on this one, whoops, might be able to see something a little more detailed on the 1-hour. My internet's slow. Yeah. Well, I guess this would have been part of it. This here would have been like a CISD. If you use SMCX, I think this would probably be something like a CISD right here. And the price did retap that, and then came back and took liquidity or whatever. So, but if you do these, these GAN boxes, they're quite simple, and it gives you a target where you think you might be looking for a reversal. So these do work. It helps. Nothing's 100% accurate in this. Of course, this is so sweet. I love indicator X. You have these value lines, and price often bounces on them. And then you have the liquidity lines that it paints for you. So right now, Bitcoin is in a range. Whenever Bitcoin pumps or dumps, I'll pull a fixed range volume profile. I'll just start with this most recent one and just try to, for time's sake, just kind of talk about this. And I've been wanting to share this for a little while. It seems like people are watching my videos now, so maybe this will help somebody and just kind of give you an idea why I do what I do. This is a fixed range volume profile tool in TradingView, and you can find it in the menu that has the long and short position, and it's down here towards the bottom, kinda. And basically what you do is you notice like Bitcoin pumped and now it's going sideways. And so when you see that, what you want to do is grab your fixed range volume profile and then click it, say somewhere where it looks like it started going sideways, and then click it to the right. And then you click it, and then it basically measures the volume or where the most trading is happening. And this is your value area high. The red line, I have mine set to red. You can make whatever colors you want in your settings. This is my settings. So anyway, you got your value area high, your value area low, and typically you will have the price go up and down between these. It's not always perfect. It will deviate outside of the range, but the plan of trading this is you wait. You don't enter a long up here, because that's not, you don't like enter at resistance. And somebody might try to enter here, but Bitcoin has a knack of tricking people. They might have thought it broke out and this was the retest. But no, trade the volume, and you only enter your longs down by the green line, the value area low. Or in this case, I would be like, okay, when Bitcoin gets down there or lower, I'm watching it, and then I'm going to enter a long on an altcoin because I expect that to be affected by Bitcoin going up and back and forth. So, these ranges are great for any coin when it's not trending and it's ranging. You can measure it. And this is Bitcoin, so altcoins are going to move way more when Bitcoin moves a couple percent. But from the bottom of the range, the current range, it's 2%. It's pretty good for Bitcoin from the bottom to the top, because you also have the deviations, and you can use your TDIX, your shark fins and stuff like that, crosses of the sentiment line to help you to kind of gauge if it's going back into the range. If it gets accepted into this range, if it came out, if it gets back in, it's probably going to the top. If it was above it and it came back in, it's probably going to the bottom. So you never want to enter a trade in the POC, the white zone in the middle. That's a no trade zone. See, the theory is if you enter a long down here on some altcoin and Bitcoin does go up to the high of the range and breaks out and keeps going, and it gets volatile up here, you're going to be safe because you entered down here. And if you're going to short when Bitcoin goes like above the range and then it's kind of coming back, like it's going to get accepted, like right here even, like, or anywhere here, and you start looking for shorts, because that way if it falls down and then falls through the bottom, you're safe. You're in a safe spot, and then you got to ride it. But you never enter a long on the top or a short on the bottom. It's just not how you do it. If you miss it, you miss it. Just wait. Price will range often. There's a trend, and then there's a range, and there's the trend and a range, and it just goes over and over and over. And you'll have these lines, and you could trade from the top to the bottom, and then it breaks down. So you would have entered your shorts up at the top, not at the bottom. Just remember that. It's important. But in this case, you're just watching Bitcoin to see what it's doing, so you can kind of help that, or have that help you consider your bias, because you don't want to really trade against Bitcoin if you're trading an altcoin and the price moves so much more on the altcoin. So what I have here is I have my fair value gaps. These are targets. I expect price to go fill those one day. The green areas, if I have a fair value gap above, I'll make it kind of red. But when I have some line or key level below, I make it green. And if it's, this way, I just quickly look at it and I think it might bounce in one of these green areas or one of these demand zones where they're opposite color candles. It often does bounce on those hourly demand zones. So I'm expecting Bitcoin to try to go for these fair value gaps, but it is leaving so many behind. There's even a weekly fair value gap way down here, and it's also a 4-hour value gap down it. It still hasn't been tapped, even from 92K to like 90K, 88K even. That 88K actually used to line up with a Fibonacci, but now that Bitcoin kept running, it's not, the confluence isn't as much there. So, but yeah, I expect Bitcoin to go for these. Maybe not. Bitcoin has a supply shock, so it has a tendency to go up. It might not come back down for these for a long time. Bitcoin, it respects TA to an extent, but it's just so bullish with all these people FOMOing it and these institutions wanting it really bad. So yeah, that's pretty much what I do. How I get my bias, and I want to do this like at the start of the week to kind of see, because a lot of things change with the weekly candle close and the new weekly candle open, which is here soon. Then it'll have levels. You'll see a lot of volatility during that time, before and after that moment. And on the daily candle, every day, for me it's 10 a.m., the daily candle closes and the new one opens. This is a good time to set your levels, and then, when you have them, then you can just kind of go from there for the week and reevaluate it as you go. but you save all your lines. You can put them in object trees and hide them. You can keep them there and then hide them if your charts get messy. I think you can just highlight a bunch and then turn it off, or turn them all off with this thing over here that says like hide drawings or something. Or you could hide like your indicators and leave your drawings, or hide all. But I don't want to do that. I don't mind. I don't mind the messiness sometimes if it makes sense to me. But yeah, that's it. That's what I do. I'm looking at Bitcoin right now, and it's interacting with the value area low. I will probably be looking for a long soon, because if this candle closes with a big wick, like it's come down, taking this liquidity, it might even tap this liquidity in this demand zone. So Bitcoin might come down here, snatch this liquidity, and then bounce. It might even dip into this fair value gap a little bit. It could deviate. And what happens, oh, by the way, what happens is as the price action continues, the volume, this fixed range volume profile, it measures like the amount of trading volume at these prices. And where the point of control is, the most trading is going on there. So as volume builds down here or up here, these lines will adjust. If you have the settings set to like extend to the right, I don't have that. I'll just repull it every time. But you can basically keep pulling it every once in a while when the bars get past it, and just get, it'll refresh it. The lines will change a little bit when it recalculates the volume. And that's that. You have a decent general idea of where Bitcoin might be going, and you can use that to help you with your decisions on what you're going to be trading. So I'll be looking for longs. I've been looking at this grass. It's a slow mover, and it could come down a little bit more, but look at this. It's hit a demand zone like right at the middle line. I don't think that's a coincidence. It's got a nice looking wick candle here. This thing might be ready to pop. I would wait. Even I had entered a trade somewhere around here, and it took profit, and then it came back down, and I was like, maybe I'll enter here, and then I was sleeping. And it's still waiting to play out, but I'm waiting for it to get above one of these value lines. That's what I'm waiting for, because that value line's still strong resistance, and I'm not messing with that. I'm not longing resistance. Do not long resistance. Don't long into the 200. Wait. If you didn't get in down here, just wait until it gets above and rechecks. You might feel late, but this thing with this bullish money flow divergence, it might go for quite a while. You're going to catch some trades. Don't FOMO. Be smart. Get money. Take your profit. That's pretty much it. That's what I do with Bitcoin. It's pretty simple and rudimentary, but it works for me. Figure out what works for you. And I hope this gave you some ideas.